So everybody wants to know, when are mortgage rates going to come down? Obviously, no one has a crystal ball, but there is some logic in predicting the future. I'm going to give you my thoughts on this, but before I do me a huge favor, hit the like button. And if you're not already a subscriber, please subscribe to the channel so you get more content like this. So as a 20-year plus mortgage veteran that pretty much studies this stuff all day long, I'm going to give you my 2 cents on why I think that mortgage rates are going to improve. And in fact, I'm going to give you a date that I think you're going to actually see some major improvements and explain my methodology behind it. So inflation is the enemy of long-term debt. And since mortgages are by nature a long-term debt via being a mortgage-backed security like a bond, inflation is bad for interest rates, guys. So the more inflation you see persisting or rising, the worse you will see long-term debt rates. So as inflation came in, you saw mortgage rates go up, right? Well, as inflation is coming down, we are also seeing mortgage rates follow suit, okay? Now, I said I was gonna give you kind of a date. I'm gonna predict the future a little bit here. Now, if you look at May 10th, so in a couple of weeks from now, on May 10th, we're going to get April's CPI report. That's the Consumer Price Index report. Let's look at this chart. This is from the Federal Reserve and looks at the last 12 months of CPI. Now, what you'll see is the blue line on top, that's the actual whole CPI, and then the red line, that's if you extract food and energy expenses from the Consumer Price Index. The reason they do that is that those tend to be very volatile, and so they can kind of skew the numbers. So the red line is much more accurate of what people are experiencing at a consumer level with inflation. So why do I say May 10th? Well, here's how the report gets tallied, okay? It's based off of year-over-year numbers. So when we are replacing a previous year, so last April, when we replaced last April with a lower inflation for this April, it's actually going to show a much larger drop in year-over-year inflation. We saw this happen on November 12th of this last year. And what happened? The bond market rallied, and we saw one of the best improvements in interest rates in a single day. Now, I'm not sure if that's going to happen again, but as far as when interest rates are going to improve, they are improving and they're heading in the right direction. It's all going to be tied to inflation. So as we see the Federal Reserve, when the Fed starts to acknowledge that inflation is in check and that they're going to pull back from their tightening, you'll see rally in the bond market once more, and you'll see further improvement in rates. That means more buyers are going to be able to afford to participate in the market or even want to participate in the market. So if you're somebody that's sitting on the sidelines right now because of rates coming down are not your best friend. High rates are your friend in this market. Why? Less competition. We're already seeing tons of competition for the slim amount of inventory that exists. But let's say that you already own a home. That means most likely you've got a mortgage. And if you weren't one of the lucky people that took out a mortgage in 2020 or 2021 at like 2-something%, you are probably looking for an opportunity to drop your interest rate. That opportunity may be coming to a theater near you. If you want to get notified of when rates drop for your exact scenario, go to bereadytorefi.com. You'll share a little bit about your mortgage scenario, and you'll actually get a text message when rates drop enough for it to make sense for you to refinance. If you got questions about this, put them in the comments below. I'd love to answer it. We'll see you on the next video.